Let's go to tax saving power tools. Remember, tax savings, S-Corps, they have 3 distinct characteristics that we use in our work together. They've got about 75 typical deductions. 75. Now, most of you are only taking about 20, 30, maybe 35 of them. But that's the pool that most accountants and CPAs work from. They also have a December 31st year end. And they're flow-through entities, which means any gain or loss flows through to your personal return. And that, by the way, is why if you're just starting your business, you might have a $100,000 salary. If your business loses money this year, say 20 grand, as a new business owner, you can subtract that $20,000 from your $100,000 salary, and what's your taxable income this year? Only $80,000. C corporations have a different set of characteristics. You get to choose your year end, and that'll have some. That'll bring some good news to many of you that are starting to make a lot of money in just a little while. They also have how many deductions available? 300. And how many are you taking on average? 20, 25, maybe 30. They also pay only 15% tax on the first $50,000 of income. So I shared with you that I learned this stuff because of my own tax situation, and I wasn't happy with it. And I used to call my family CPA, who did my books when I was practicing as an attorney and starting my real estate career. And I'd say, hey, Lenny, did you know that such and such was deductible? And Lenny'd say, no, I didn't know that. I'd say, okay. And I'd go back to work, and I'd do a little more research, and I'd call him up and say, hey, did you know that I could deduct my health care, 100% of it? Some of you are you're deducting your health care. But your accountants or CPAs have no doubt told you there's a limit to how much you can deduct. Is that right? Yeah. The limit is in which tax system do you suppose? The uneducated tax system. There is no limit in the educated tax system. That's one of the reasons they call it the educated tax system. So then I call up Lenny and I said, hey, Lenny, I just found out another one. Did you know that a C corporation pays only 15% tax on the first $50,000 of net income? And this time, what do you suppose Lenny said? He said, of course I know that. I'm a CPA. I've been practicing for 25 years. What do you take me for? And I said, well, Lenny, let me ask you something. If you knew that, why don't you have me in a C corporation? Does knowing it save you any money? Doing it saves you money. And it was in that moment that I realized that this information's out there. Your accountants, your CPAs probably know some of it, maybe most of it. But you're not getting the benefit of it if they're not actually doing it. And that's what our program is designed to do, is to take you through step by step so that you can get the benefit of it. Does that make sense to everybody? Some of you using a tax program like this, especially this time of year, that's fine. But which tax system was this designed for? The uneducated tax system. Let's talk about 2 powerful strategies that will save you thousands and thousands of dollars. Number one is the power of documentation. It's to audit-proof records. And I mean audit-proof so that if you're ever audited, you've got nothing to worry about. Who, what, when, where, and how much. Who, what, when, where, and how much. But then I'm going to teach you the 6-column strategy, which is a way of going back and recouping money that you've already overpaid. Now, we can't do this forever, but we can go back 3 to 4 years. By adding a 6th column, we're going to identify all of those deductions that you missed, and then you're going to go back and redo your taxes and amend your past returns. I taught that strategy to John Delemy, some of you may have heard of. He said, I just rechecked my figures, and I'll save another $26,867 with the strategies that I learned on last week's teleclass. We do teleclasses every single week. We used to do them monthly. We now do them weekly to get this information out to you. I'm going to move quickly, but I want to go through just some of the specific deductions so you guys have a better idea of what is available to you. Would that be okay? My goal for you would be taking notes on this. Write these things down. You can start. When can you start doing these things? Right now. So let's get you out the door with thousands of dollars in savings. Would that be okay? Home office, under Section 280, I've heard accountants, CPAs, all kinds of people say, you don't want to have a home office because it'll raise a red flag. You guys have that same CPA, huh? Yes. No. Right out of the tax code, if you do it right, there's no red flag, Section 280. Diane is an assistant in a chiropractic office, my chiropractor's office. You'll meet Rennie in just a couple minutes. And she had a network marketing business, a Mary Kay business. And she was making a couple bucks a month, maybe $200, $300. I taught her how to deduct her home office. That saved about $5,000 in taxable income. Office equipment, supplies, and supper money under Section 274. By the way, the code sections, we will give you all of the code sections in the course. So that if your accountant's sitting back going, well, this all sounds just great, but where's the beef? I got to know what code, where this is coming from. We'll give you the code sections. You give it right to the accountant. Fair enough? Corporate gym. Some of you have gym equipment, or you'd like to have gym equipment, maybe a Bowflex, maybe an ab roller, or maybe a treadmill. Your corporation, your C Corp, can deduct the entire cost of that equipment. How much? All of it. Section 132. Even if the company's brand new and hasn't made any money yet. Some of you are just getting started. Rennie is my chiropractor. And I taught him 2 strategies under Section 105 and 106. Because he actually not only used them himself, he passed them on to his patients. Under Section 105 and 106, if you have a written medical reimbursement plan, you can deduct 100% of your health care, 100% of your insurance, 100% of your deductibles and copays, even things that are not covered by your insurance. How many of you have ever had a procedure that your insurance refused to pay for? You know, I had that eye surgery a few years back, and my insurance company wouldn't pay for it. I went from 2200 vision to 2020 virtually overnight. It cost, anybody ever have that done? What did it cost? $3,000, $2,500, $4,000. Some people pay. Your company can pay the entire cost of that. Tax, pre-tax, with pre-tax dollars. Tax deductible. Some of you may know this book. It's called Conversations with Millionaires. Mike Littman and Jason Oman are good friends of mine. When they wrote this book, before they wrote it, Mike was a radio talk show host, and he was doing okay. His income was pretty stable. He'd been doing it for a number of years. What do you suppose happened when this book came out and it hit #1, bestseller? His income spiked, right? Sometimes your income doesn't go up gradually. Sometimes, bang, it goes right up. So he called me up. True story. I'm out here in California. He's in New York. He's coming back from his accountant's office, his CPA's office. And he calls me up. He says, Drew, you got to help me out. I said, what? He said, I just came back from my CPA's office. And she told me I made a lot of money this year. So I said, so what's the problem? He said, because she told me I owe a lot of money in taxes. You got to do something. You got to help me out. So I taught him one strategy, a strategy called upstreaming income. I said, where are you right now? He said, I'm on the Grand Central Parkway. I said, pull over. He said, what are you talking about? I said, just pull over. I'm going to tell you how to do something. I want you to write it down. I don't want you driving. So he pulls over. He says, okay, I'm ready to go. I said, get out a pen. He said, I got my pen out. I said, I want you to write this down. Upstream income. From one corporation to another. From one tax year to another. And in some cases, we do that from one state to another. It's legally shifting money from a high-tax state or entity into a low or no-tax state. And we do that with contracts, and we'll give you all the forms. Don't worry about the how-to right now. I want you to get the concept. So meanwhile, back to Mike. In about 5 or 10 minutes on the side of the Grand Central Parkway, I taught him how to do this. I said, now turn around and go where? Back to your CPA. And tell her this is a strategy you just learned, and you want to verify that she can use it. And then tell me how much you're going to save. And he did. He called me up about 2 hours later, and he said, Drew, that simple strategy, which took her maybe 10 minutes to even understand and then to apply, saved me $60,000 in 1 year.